Memphis has been a strong rental market. It's affordable, there's job growth, and steady rental demand. Those are three elements that are amazing. For any real estate investor, this is awesome. So let's break down one deal, the following deal, step by step. First of all, you need to understand the deal. Step one, you must understand the deal. So this is a property detail on a house. The house is a duplex. The purchase price is $160,000 and the monthly rent is $2,000. There are two units. Remember, this is a duplex, $1,000 per unit per door. The annual rental income, if you were to multiply 2,000 by 12 months, that's 24,000. Are we all with me? Property demand and rental demand and affordability makes this look like, this sounds good. So if I were to look at it, you know what I'm thinking? 160 for a duplex, so that's $80,000 each door, right? Start thinking like an investor. $1,000 per unit, not bad, not bad, 24,000. What else would you need? So we know what the income is. What about the expenses? Don't forget that. So we are going to go next to find out what the expenses are. And those are usually estimated. So step two, we need to find out what the expenses are. Property taxes. Yes, we got to pay taxes. So Memphis has relatively low property taxes. So it's about $1,800. So the property taxes, $1,800 annually. The insurance, it varies based on the coverage, which company uses, but let's say for this property it's $1,200. So you follow? Property taxes, $1,800. The insurance is $1,200. The maintenance, I put it as an 8%. Okay, we're gonna go with an 8% rental income. So it's gonna be $1,920 for the maintenance. Okay, and the property management fee, 10%, $2,400. So let's go back again. We're going to go about the estimated expenses. So vacancy reserve, I put at 5% because you have two units. What if someone moves out? So I put it down at $1,200. I take it out as a 5% rental income. Does anyone, because sometimes even though I did this, I said to myself, I could have just put down 1,000 because it's 1,000 per unit. So I always try to be conservative. When I'm doing my deals, I try to be as conservative as possible. So I put it at 1,200. And I also put miscellaneous expenses because sometimes there are unexpected costs that arise. So I put it for 1,000. So let's go back again over the expenses. Property taxes, about $1,800. Insurance, $1,200. Maintenance, $1,920. That's an 8% of the rental income. Property management fees, $2,400. That's 10% of the rental income. Vacancy reserve. This is vacancy reserve. I put $1,200, 5% of rental income. Like I said, I always try to be conservative. I know you might say, well, it's only 1,000, but I always try to cover myself, and you should too. Reserves, I have learned that when I had my multifamily property, my first one, that you must have reserve. And my coach, God bless him, always says, reserve, have reserve, over leverage, reserve. And miscellaneous expenses at 1,000, which is for unexpected costs. So that gave me an annual estimated expenses at $9,520. Anyone remember how much is the annual income? Yes, if you remember, 2 units at 1,000 times 12, 12 times 2 is 24,000, and we just had an estimated expenses at 9,520. Hee hee, not bad. So far, so good. Okay. Even with all these expenses accounted for, you should also know that Memphis properties typically generate positive cash flow because their affordability and strong rental demand. Always remember that. Okay, I hope that's a tip for today. No matter what, it's a very strong area. Also, Memphis offers high rental yields even at a relatively low property price, which means strong cash flow and compared to other markets.